In the world of finance and global markets, few names hold as much weight as the New York Stock Exchange. With its iconic trading floor and a history spanning over 2 centuries, the NYSE has become synonymous with Wall Street and the heart of capitalism. Join us as we delve into the captivating story of the NYSE and uncover the forces that have propelled it to the forefront of global finance. Stock trading has a long history that can be traced back to ancient civilizations. In these early societies, individuals would engage in informal transactions involving shares of businesses or ventures. For instance, in ancient Rome, investors could purchase shares called parts. In maritime ventures, sharing the risks and potential profits. During the Middle Ages and the Renaissance, stock trading began to take a more organized form. In Europe, merchant guilds and trading companies emerged, facilitating investment opportunities. These entities allowed individuals to pool their resources and invest in various ventures, such as overseas exploration or trade expeditions. Shares in these ventures were typically bought and sold through informal networks or specialized trading centers. However, it was during the 17th and 18th centuries that formal stock exchanges started to emerge in Europe. The earliest notable example was the Amsterdam Stock Exchange, established in 1602. The exchange facilitated the trading of shares of the Dutch East India Company, one of the world's first publicly traded companies. The Amsterdam Stock Exchange introduced standardized trading practices and created a central marketplace for buyers and sellers to transact. This development paved the way for the establishment of other formal stock exchanges in Europe. In 1698, the London Stock Exchange was founded, providing a regulated marketplace for securities trading. It grew in importance as Britain's colonial empire expanded, attracting international investors. Similarly, the Paris Bourse was established in 1724, becoming France's primary stock exchange. The New York Stock Exchange was established in 1792 under a buttonwood tree on Wall Street in New York City. A group of 24 brokers signed the Buttonwood Agreement, which laid the foundation for organized stock trading in the United States. Over time, the NYSE grew in size and influence, becoming a symbol of American capitalism and the epicenter of global finance. The NYSE's historical significance stems from its role as a primary source of capital for American businesses. By allowing companies to list their shares and raise funds from investors, the NYSE has been instrumental in fueling economic growth and innovation. It has provided a platform for companies to expand, create jobs, and drive progress in various industries. It serves as a barometer of market sentiment and plays a crucial role in shaping investment trends and market behavior worldwide. The NYSE's performance influences investor confidence, economic indicators, and even government policies. Moreover, the NYSE's listing standards and regulatory framework have set benchmarks for transparency, corporate governance, and investor protection. The exchange's reputation for stringent requirements has attracted companies from diverse sectors, establishing it as a premier destination for businesses seeking capital and public exposure. The New York Stock Exchange has undergone significant transformations throughout its history, contributing to the evolution of the stock market as a whole. One major development that shaped the NYSE and the stock market in general was the introduction of electronic trading platforms. With the adoption of computerized systems in the 1970s and 80s, the NYSE experienced a revolution in trade execution. Electronic trading replaced manual processes, resulting in faster and more efficient transactions. This shift not only increased trading volume, but also enhanced market liquidity. As technology continued to advance, the NYSE embraced new innovations and adopted commercialized trading systems. Electronic order matching systems such as the Super DOT or Designated Order Turnaround were implemented in the 1980s. These systems enabled faster order processing and automated various trading operations. By leveraging technology, the NYSE improved efficiency and paved the way for further advancements in the stock market. The NYSE's influence extended beyond the borders of the United States through the process of globalization. The exchange played a crucial role in the integration of international stock exchanges. By facilitating the listing and trading of international companies, the NYSE attracted foreign investors and promoted cross-border investments. This globalization of financial markets expanded opportunities for businesses and investors, creating a global marketplace that transcended national boundaries. Regulatory changes also played a significant role in the NYSE's evolution. The establishment of governing bodies, most notably the U.S. Securities and Exchange Commission, introduced regulations to ensure fair trading practices, protect investors, and maintain market integrity. These regulations have continuously adapted to address emerging challenges and align with evolving market dynamics. The establishment of robust regulatory frameworks provided confidence to market participants and helped foster trust in the NYSE and the broader stock market. Furthermore, the NYSE witnessed the introduction of new financial instruments and trading strategies. The advent of derivatives, such as options and futures, provided investors with additional risk management tools and speculative opportunities. These instruments added depth and complexity to the market, attracting a broader range of participants. Additionally, new trading strategies, including high-frequency trading and algorithmic trading, emerged. These strategies leveraged advanced technologies and algorithms to execute trades rapidly and efficiently, further shaping the NYSE's landscape. Collectively, these developments have transformed the NYSE into a sophisticated and dynamic marketplace, catering to the evolving needs of investors and businesses. The integration of electronic trading platforms, globalization, regulatory frameworks, and innovative financial instruments have contributed to the NYSE's evolution and solidified its position as a leading stock exchange in the modern era. Recent events have had a significant impact on the functioning and perception of the stock market, reflecting the dynamic nature of the financial world. These developments have shaped investor sentiment and influenced market behavior in various ways. One notable controversy that garnered attention was highlighted in the CNBC link provided. The controversy surrounded stock exchange owners and the sales of stock amidst the COVID-19 pandemic. Specifically, the controversy involved the CEO of the New York Stock Exchange's parent company, Intercontinental Exchange, or ICE, Senator Kelly Loeffler. The controversy raised questions about potential conflicts of interest and the need for transparency in stock trading activities by company insiders. Such controversies can have a temporary effect on market confidence and may lead to calls for increased accountability and regulation. The COVID-19 pandemic itself had a profound impact on the stock market. As the pandemic spread globally, it triggered a significant downturn in stock markets worldwide. The rapid and widespread nature of the pandemic created uncertainty and fear among investors, leading to heightened market volatility and sharp declines in stock prices. Government and central banks implemented various measures to stabilize the markets, including fiscal stimulus packages and monetary interventions, such as interest rate cuts and quantitative easing. These measures aim to restore confidence, mitigate market disruptions, and support economic recovery. In response to the pandemic, stock exchanges implemented measures to ensure business continuity and the safety of market participants. The NYSE temporarily closed its trading floor and transitioned to fully electronic trading. This move demonstrated the exchange's adaptability and resilience in the face of unprecedented challenges. Electronic trading allowed for seamless operations and continued market functioning while prioritizing the health and well-being of employees and traders. Furthermore, the pandemic accelerated certain trends in the stock market. The shift towards remote work and digital transformation prompted increased adoption of online trading platforms and further advancements in financial technology. Retail trading activities surged, driven in part by increased participation from individual investors seeking opportunities during market volatility. In terms of market capitalization, which refers to the total value of listed companies' outstanding shares, the NYSE has historically held a prominent position. Many of the world's largest and most well-known companies, including multinational corporations, are listed on the NYSE. This contributes to its reputation as a major hub for capital formation and investment. Nevertheless, it's important to note that other stock exchanges around the world have gained significance in recent years. One notable contender is the Nasdaq, another major U.S. stock exchange. While the Nasdaq primarily lists technology companies, it has experienced substantial growth and has become a significant player in the global stock market. Furthermore, international stock exchanges such as the Shanghai Stock Exchange and the Tokyo Stock Exchange have seen remarkable expansion and play pivotal roles in their respective regions. These exchanges cater to large economies with substantial domestic markets, contributing to their overall size and influence. Additionally, the concept of the largest stock market can also be evaluated based on trading volume, indicating the total number of shares traded within a given period. In terms of a daily trading volume, stock exchanges in emerging markets such as the National Stock Exchange of India and the B3 in Brazil have recorded substantial trading activity, rivaling the NYSE. It's essential to consider that the status of the largest stock market can fluctuate over time. Factors such as market performance, economic conditions, technological advancements, and regulatory changes can influence the rankings of stock exchanges. And that's a wrap, folks. What do you think is the most significant milestone in the NYSE's evolution? The transition to electronic trading or its integration with other global stock exchanges? Let us know in the comments, and don't forget to leave a like and subscribe to support our channel.